Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow.
All right, welcome to Market Call. I'm Dan Nathan. I'm joined by nobody at the moment. We have a very special guest coming on in just a few minutes here. Adami is still on vacation, but we got a lot to talk about today, given what happened yesterday afternoon. I mean, things seem to be just fine, heading into that Fed meeting. We know that we had the Fed presser, we had the dot plot that was coming after that. I think the expectations were that we were going to have this cut, 25 basis points. This was going to be the third cut since mid-September, and it was going to equal but 1%, right? Off of that high bound that we were at 5.5% in the Fed funds rate. So they did it, and they had pretty much a hawkish cut. And what does that mean? That means that essentially expectations for more than expected cuts going forward into 2025 were kind of dialed back a little bit. What I find really interesting about what happened is that, okay, if that's what the expectation was, and the expectation, the CME Fed funds tracker was suggesting there was going to be 25 basis point cuts in 2025, to notch that back to just 2 based on the dot plots, right? And just to kind of think about how the Fed wants to be data dependent. Well, why do they want to be that way right now? Because there's a whole heck of a lot of uncertainty out there. We have a new administration coming in. They want to do a lot of things pretty different than the last 4 years. If you think about the last 4 years, it's been a pretty good ride other than 2022. We had that very orderly sell-off. I think at the lows, the S&P was down 27%. The NASDAQ was down 37%. That was really working off, I think, a lot of excess risk taking that happened in the back half of 2020 and all of 21, and stocks and like risk assets like crypto and the like, they didn't really start selling off until the Fed said that they're going to start raising interest rates to battle inflation. So let's look at this on the other side of it, right? Inflation's been going the way that the Fed has wanted to do. They thought they could normalize interest rates because they felt like they were going in the right direction as it related to inflation. They have that 2% target, but the 2% target, and Guy has been making this point for an awful long time, that's great. But if you think of the cumulative nature, right, of inflation, it was up 20%, I guess, really since the pandemic or so. That was the thing that was hurting a lot of consumers. All right, so the news comes out, the Fed pressure's going on, the stock market sells off dramatically. The S&P was down 3% at one point. The NASDAQ 100 was down 4%. We're going to look at the futures charts in a second here. And, you'd say, well, why? If that was kind of the expectations. Well, rising yields has been one thing. We've been talking about the 10-year yield going higher, despite the fact that Fed funds rate was going lower. You had a strong dollar going up with yields. If you think about what's driving EPS growth in the S&P 500, it's large multinationals. When you have a strong dollar like that, and a lot of the revenue, maybe 30% of these large multinationals comes from overseas, well, you better be worried about that from an earnings standpoint. And the other thing is, if you look around the world and a lot of really key end markets like China, their economies are not doing well, right? And so after the close tonight, we are going to get a sense from Nike what they have to say. Look at that dollar, right? So that's a U.S. dollar index. You see that 150-day moving average? It's flatline. Okay, we get it, right? So if you look at it where we are right now, where we were at the lows, we're kind of, that 150 days at the midpoint. Who knows if we have a check back towards that moving average? But let's pull this out to a 5-year for a second. So the last time that the 10-year yield was at 5%, the U.S. dollar index was much higher than where it is right now. So if you're worried about forward guidance from large U.S. multinationals that really are going to dictate the pace of 2025 EPS growth in the S&P 500, the dollar going higher is a massive headwind. And so, John Butters over there at FactSet, the senior earnings insight analyst, we just talked about it yesterday on the market call, Liz and myself, that 15% expected EPS growth. If the dollar keeps going higher and yields stay higher and the rest of the world is weak, the chance of getting to 15% EPS growth is probably non-existent in my opinion, right? So let's look really quickly at the S&P futures here. This was obviously the main event yesterday. Coming into the Fed meeting, we saw a Dow Jones Industrial Average down 9 consecutive days. So yesterday, you throw that in there, I guess that was the longest period of consecutive down days since 1978. Now, we talked about it yesterday with Liz, who cares about the Dow Jones Industrial Average, 30 stocks, price weighted, doesn't really mean anything. Well, let's look at the S&P futures here. Let's tighten this thing up just a little bit. That is going back to, I think, the start of this year. But let's look at like a few months here or something like that. And this is one that I think is really interesting. Obviously, that shows a little bit more of a consolidation. If we make it look like a 6-month sort of thing, you see a little bit what's going on. We're still kind of ways away from that 150-day moving average, but we see a market today. I'm looking at the S&P futures right now. They're up 30 bips, okay, after being down like 3% yesterday. You better watch out here because, and you better not cry, but you better watch out that this thing doesn't go down in the day, because I think you're going to see some testing of yesterday's lows. And so keep an eye on the MAG 7, or as we're calling them, the Fateful 8 right now, because they really do dictate kind of the course of the markets. And the other thing I'll just say is, if you're looking for pockets of strength today, I see it in some of the bank stocks, but I just saw Bank of America go down in the day, Morgan Stanley go down in the day. So those are the two areas that I'd really want to keep an eye open for. Look at that. It's kind of filled in that gap almost. That was the Bank of America, Morgan Stanley doing the same thing. You know, a lot of the hopes, why did those stocks have such big gaps on November 6th? Well, the idea of deregulation and a whole host of other things, M&A, IPO calendar for Morgan Stanley reopening, good stuff for them. So let's see if these things can get back towards filling in the entire gaps. Really quickly, we just mentioned the Fateful 8. What are those? Those are the $8 trillion market cap companies. It was the MAG 7. We put that thing to bed. Now we have Broadcom that's entered that. That's what we get, the Fateful 8. Why do we call it the Fateful 8? Well, let's be clear about this. The fate of the market, in my opinion, is kind of in the hands of those 8 stocks. As we get into the new year, as we get into Q4 earnings season, as we get Q1 guidance, if any of those companies or a handful of them together kind of give weak guidance for the current quarter, I just really think that we're going to have a bit of a correction here. Look at those NASDAQ futures. You see that 150-day moving average. It's about 2,000 or 20,100. You saw that where we were, you know, just about 22,000 just a couple days ago. Might we see a retracement back towards that? Yeah, maybe. Why not, right? So that's the way I'm thinking about the sell-off. That's the way I'm thinking about earnings growth. That's the way I'm thinking about the technical levels here. I did tease yesterday that we are going to have a very special guest. And this special guest, I just want to kind of put some context around it. If you're here in Market Call and you come every day and you're hanging out in that chat room and you're kind of conversing back and forth, you're putting some questions in there, put some questions in there right now here, people, because we're going to take some in a few minutes. Then you know a person that we refer to as AD. That would be Amanda Diaz. This is going to be Amanda's first time on the Market Call, on screen on the Market Call. We know that she is ever present in that digital world that a lot of you guys live in. So let's bring in Amanda Diaz, the very special.
Hi.
She is. I mean, Amanda, these people have no idea what you look like. They obviously just know.
They Googled me.
Did they Google you? Are you
They
all
had
over
to
the
have.
Google?
I'm all over the Google.
So just to take a step back here. So Amanda, Guy, and myself, we go back, I want to say back to 2010. Is that correct? Amanda was a very young buck. She was working at the CNBC. She was working on Options Action. That's where I first met her. She was working on Fast Money. That's where Guy first met her. By the time I started doing Fast Money regularly in 2011, I was still doing Fast Money. She was in my ear all the time. She was helping to put together a lot of the ideas that we were doing. So Amanda is she's as good as it gets when it comes to this business, not only from a media standpoint, but also understanding markets and understanding what sells in financial media. Is that fair, Amanda, a little bit?
Sure. The chat's going wild right now.
Really? Okay,
Yeah.
so I don't have my eye on it. So Amanda's coming in. She's going to help me out a little bit as we get through a bunch of this content. So Amanda, how do you want to do this? I mean, where do you want to go?
Well, do you want to look at Nike before we take some questions?
Okay. All right. So Nike, this is an interesting one. All right. So let's go back to, I think it was a couple months ago. They hired, I believe, the CEO, the turnaround guy from Chipotle. Okay. And this was supposed to be no, it wasn't from Chipotle. Oh, that was Starbucks who did that. I'm sorry. This was around the same time, right? So the Nike guy, this is Elliot Hill. I should have been a bit more prepared for this. Oh yeah, he's a longtime Nike guy. He's been there over 10 years, and the sales guy, been focused on consumer and marketplace. So he was made the new CEO. This did not. Let's go to Starbucks for a second, Amanda,
Yep.
because in and around the same time, Starbucks got this guy Mike Nickel from Chipotle, and look at the gap that Starbucks had. Look at that. That gap was when they named a new CEO. We'll go back to the Starbucks chart for a second, but now going back to the Nike one, I mean, October of 24, this is when they made the CEO change, and the stock did not go higher. What did investors were thinking? Well, maybe they picked an insider rather than an outsider. Like every once in a while, you want somebody to come in and shake some stuff off a little bit. So let's go back to the Nike for a second, or shake things up a little bit. Well, that didn't really happen. And, one of the biggest concerns right now would be their exposure to China. We know how weak the Chinese consumer is. So this thing can't really get out of its own way. And so to me, I actually think that there's risk here. If the company was able to put up a better quarter and guide a bit higher, you'll see a pop. You'll see it get through that 150-day moving average, in my opinion. You'll probably get back to, I don't know, like maybe, just under $80 or excuse me, under $90. Maybe you see mid to high 80s a little bit, but then I think it gets sold because of all of the geographic uncertainty that you have specifically in China. Let's move this to a 5-year chart for a second here, because we want to put some context of where this thing was at the lows during COVID. I mean, just look at this thing. It's a train wreck, and it's really kind of hard to find too many stocks like this, name brands, you know what I mean, that people have loved for, decades, trade this poorly at this point in the game with an S&P that's been up more than 20% for the last 2 years or so. The implied move in the options market is about 4%. That doesn't seem like a lot. But if I look at the results over the last 4 quarters, the trading after the last 4 quarters, I see a move of down 7%, down 20%, down 7%, and down 12%. Those are the last 4 quarters. I don't know, man. I'm not stepping in front of this one. Amanda, are you buying some of the Nike athleisure these days? Are you more of an athletic guy, gal? Are you kind of into the Vuori? That's a new one. Maybe
I love Vuori. I just bought CC some Nikes last weekend. So
really. Okay,
yeah,
she's a little walker now. She's about 2 years old. What, her birthday was what, 2 weeks ago or something like that?
Yeah, the 3rd.
So some of you guys will remember that we lost Amanda for 4 months. This was about 2 years ago. She had little baby Cece, which was it was just obviously amazing for all of us. It was kind of heavy lifting for the rest of our team, Amanda. So don't worry about that. We were flying blind for like 4 months. But so Cece's a Nike gal right out of the gate. That's pretty cool. And you're into the Vuori. Are you buying less Lulu? Let's throw up a little Lulu chart here for a second.
Yeah. Actually, Jeff H is asking about Lulu.
Okay, let's look at the Lulu. So this is one, and we detailed some bullish trade ideas. Let's go to a 1-year chart for a second here. So like the pace in which that this thing sold off, there was a couple earnings gaps there. I think a lot of folks were suggesting there was some execution on the product front, some obviously earnings misses and the like. I think Carter, let's go to a 2-year for a second, would refer to this as a bearish to bullish reversal. And we just started to see a bottom being put in. And then you see that gap that we had on earnings where despite expectations building because of the stock move right into that print, you saw a nice bounce there, people chasing it and thinking, well, maybe we get back towards those prior highs or at least somewhere around 500. Let's tighten that up for a little bit so we can kind of see that gap again, Amanda. So yeah. I think this is really important. We're gonna highlight a lot of these today. So, Carter says this all the time. Gaps are meant to be filled. Here we are. We're through that gap level. So when I think about a gap, I think about the opening print, right? And so the opening print, you can see, we've just violated that, right? So from a technical perspective, I think those are really interesting to see if they fill in the gap and then if they find some support down there. So the Lulu, this is one that obviously is much more expensive than that of the Nike. I just feel like with the new CEO there, Nike might be predisposed to kind of lower guidance or not give particularly aggressive guidance whatsoever. And that could put some pressure on the stock. I think they're going to have a whole heck of a lot of uncertainty as it relates to growth markets like China. So there's that. I'm not playing that one into the print. Let's go, Amanda. You got another question here? Because we could kind of sprinkle some questions in here.
Yeah, let's take some questions. This one's good. Chris E says, is AMD just a certified dog or is it a buy here? I'm going to pull up the chart.
All right. Well, that's a good question. One of the things that we've been talking about this a little bit, right? If you look at the SMH, the ETF that tracks it, we'll spend a couple minutes on AMD for a second here, though. So I think you can tell by that price action, it is a certified dog. There's no other way to think about it. It just went through that August low. This is a stock that, went from, I don't know, 120 to 220 or 225, in a handful of months last spring into the summer. And from that spike high that we had into the spring, we are now down 47%. So the stock has been cut in half. When the stock was going higher, and let's pull out to a 5-year chart, okay, off the lows that we saw, I want to say in the fall of 23, that was an easy double. Okay, the stock was up 100, and then it's just been making a series of lower highs and lower lows, and it looks like it's going to take out that low from earlier this year pretty soon. So what is the story here? Well, a lot of people were optimistic that they were going to be able to come up with some sort of product that's competitive to NVIDIA and their GPUs that are powering a lot of these servers that go into the data centers that train the models. And when I say that, guys, I say it over and over again. Yeah, it's getting a little boring. That's the narrative. And as far as I'm concerned, let's pull up a Dell. We're going to get to Micron in a second here, right? So if NVIDIA chips and Micron memory and AMD chips and Broadcom doing, doing design chips for some of these things, if some of these stories are kind of falling by the wayside, now Broadcom is not one of them. NVIDIA has been underperforming. AMD has been a disaster. Dell has reversed the whole move. Microsoft, one of the early beneficiaries of this generative AI trade through their investments in OpenAI and the contracts that they've had with OpenAI to use their compute, basically their Microsoft Azure cloud, right, to train OpenAI's model. Microsoft's been stuck in the mud. So I just think there's pieces of the story that are kind of coming undone a little bit as we get into the end of the year. So it'll be interesting to see what the narrative is going into 2025. But Dell is interesting for the same reasons that Micron. Let's do this a 1-year chart, Amanda. We saw that gap after their earnings, disappointing guidance. And again, we thought that, well, maybe they took some market share from Supermicro as they've been having a whole host of issues, obviously on the accounting front and some other stuff here. But look at that really orderly rally that it had from the summer into just a month ago or so when they reported earnings. And to see a gap below that moving average and make continued lows, I mean, it's got to make you kind of get your antennas up about this whole trade. So back to AMD, the CEO, Lisa Su, she keeps talking about this total addressable market for GPUs, like keeps pushing it out, like how much it is over the course of time and how they are going to capture more and more of that. Well, investors don't believe that anymore. And that's why the stock, keeps going lower here a little bit. I just don't see that this is one that you want to catch a falling life, because if the sentiment or the narrative changes a little bit towards generative AI, whatever they're able to put up when they report in January and the guidance that they give, I just don't think it's going to be enough. So AMD, I think it's an avoid. Let's go to Micron for a second here, Amanda.
Sure. Let's hit NVIDIA too, because we have Dale asking about NVIDIA.
All right.
Micron first.
Yeah, let's hit Micron. So
Micron first.
We talked about this yesterday. Here's one where expectations only built a little bit because of Marvell and Broadcom. Not that they compete with either of them, but the guidance that they gave would suggest that if there is healthy demand for their chips going into the servers, then Micron would have demand for their memory. Now, if you listen to what the company had to say, the disappointment they say come from PCs and smartphones, some industrial, and some auto. And they're saying that demand for memory that's going to go into servers for generative AI is pretty good. But they said it's not really going to start to inflect until the back half of next year. I don't like hearing guidance that says back half loaded. There's a lot of companies that don't even want to give full year guidance. So when you have crappy end markets like they clearly do, you're going to talk up the one area where you think you're going to have growth. But the stock's down 17% for a reason. Investors are not buying it. You know what I mean? So to me, Micron is an avoid. I think you probably see that double bottom from the August, September lows. I think it probably breaks that and heads back towards those Feb, March lows. This one's cheap. You could try to make a valuation kind of argument, but to me, it seems a bit like a value trap, Amanda. All right, what's the question on NVIDIA?
When will NVIDIA break out from its stall? I'm going to pull that up.
Let's do that. All All right. So
This one's from
NVIDIA, we've
Dale.
been saying, is like one of the only games in town as it related to the GPUs. They make 85% of the high-end GPUs that all these companies are clamoring for or had been clamoring for to kind of, put in their servers and then put them in the data, data warehouses, whatever the hell you want to call them, data centers. So look at this one, 150-day moving average. We don't even have to draw a trend line. You see the August, you see the September, you see where it is right now. It's probably down about 13.5% from those post-earnings highs in November. And this is kind of the moment of truth. I mean, you could say, well, let's not be too hyperbolic here, because if you look at the move from those June highs down to the August lows, I think that was close to 30%. Let's just look at that for a second here. And you say to yourself, well, what we have right here is just kind of like a little bit of a, it's kind of child's play relative to that. So yeah, that was 35%? At the low. Yeah, that was 35%. But look where it stopped. And then if we look at that kind of September sell-off, right? We had from, where was that? It was about 130-ish, these current levels down to
22%.
Yeah. So, right now, so we had a 35% sell-off, then a 21% sell-off. Now we're about 15% or so. You see that moving average? I'd say that it's kind of got to have to hold that. And otherwise, I think we're easily going to 120. And then who knows what happens from there. This company doesn't report, I guess, until late February. So it's not going to be on the same cycle. We've also seen in these reporting cycles, when a bunch of their customers like Meta and Microsoft and Google and Amazon are reporting, they're looking for the CapEx number, because the CapEx number is largely going towards NVIDIA and the chips that they're buying. But as we detailed yesterday, Microsoft CEO Satya Nadella said recently that they are full up in chips. They don't need any more chips. So Jensen Huang was telling us about a month ago that the Blackwell, which is the next iteration from this Hopper chip that Microsoft has enough of, and folks were supposedly going to upgrade to Blackwell. And just remember here, people, they're spending $40,000 to $50,000 per chip. These clusters that they're making, right, using these chips are like using hundreds of these chips, right? And so what Microsoft and Amazon and Google are trying to do on their public clouds is create these clusters so their customers will come and do the training of their own models on these, right? So they didn't want to be left in the dust by some of their competitors and not have these data centers built out, right? So that's how they're going to make money. That's how they're going to get the return on this investment. So if Microsoft's saying we're good on chips, that is not a great thing for NVIDIA, especially as bullish as Jensen Huang, the CEO, has been about this. So I just think this is a moment of truth. If we see the market go down in the day and we see another couple of down days, let's see how NVIDIA acts right here, because I think the story is definitely changing. And then the other part about this, I would say, is that there's some focus on some of the investigations that are going on by the U.S. and how they're thinking about how NVIDIA chips have made it into China, given some of the restrictions that have been put in place over the last year. All right, Amanda, what else we got here?
All right, we got one from Wavy, who's here every day. What would Dan say is the biggest shorting opportunity right now into 2025? Thanks.
Interesting. Listen, I think a lot of folks that tune into this stuff, I mean, they're active traders, right? And so, when you think about shorting, you're probably using options to define your risk to some degree, right? So maybe you're buying puts, maybe you're buying put spreads, maybe you're buying put calendars, maybe you're selling call spreads, right? To get that sort of exposure. Outright shorting is probably not a great technique for most retail traders, at least in my opinion. But by the same token, just littering your trading book with puts and calls and, this, that, also not a great strategy. Why? Well, when you buy an option, right, it's just decaying like right out of the gate, unless you're kind of catching some of this price action that we've seen in some of these meme stocks. But at the end of the day, you're overpaying in vol terms for those options to play them directionally all the time too. So shorting's tough. Buying pumped up puts and premium turns is tough to make money. So when I think about, what is a good short for a lot of retail investors, and again, I don't mean to sound condescending. I make all the same mistakes you guys do, trust me. And I've been doing it for a long time. So you just want to be careful about, some of that stuff. The sentiment turns, you want to press a short, how quickly this market bounces back. We've seen that again and again. And we just highlighted that when we were looking at some of the smaller and smaller sell-offs that we've gotten longer and longer into the year. I don't love financials here. So some of the banks, I think the outperformance that we've seen of late, I think that, again, banks have done well when the yields were going lower. They did well when the yields were going higher. I think that they are kind of pinned on the idea that we're going to have a better capital markets environment, less regulation, so more M&A, opening up the IPO calendar, that sort of thing. So I look at the XLF here. We know that Berkshire is a big component. Look at it filling in that gap. So I think there's a really good chance you get back to 45 in this, and then maybe you could take another shot if it's kind of to the long side, if it's holding that moving average. But I'd probably be a seller on rallies there. This generative AI trade, the Fateful Eight. I kind of want to sell it here, people, into the new year. I kind of feel like they pulled forward a lot of excitement about what might be the return on investment that we've seen in a lot of these generative AI products. And so to me, I just think there's going to be a digestion phase. We've been talking about it here. We've been talking about it on Fast Money. We mentioned yesterday what Dan Niles said. We put his tweet up, and he and I are in agreement. He and I have been talking about that for at least a few months on OK Computer. He's been a guest here. So I think that's a difficult short, but my point is that if maybe you reduce, you know what I mean? Maybe you don't short it. Maybe if you're long, you reduce a little bit and you keep a close eye on how this thing could shake out. Diaz, what else do we got here?
We're getting a few on GDX. So
Okay.
Jignesh says, where are we on GDX? Load up or sell, sell, sell. Pull that up.
To use a very technical term, this thing looks like shit and it acts like shit, right? So you see that really orderly uptrend that it had been on, right? And you see it kind of holding that 150-day. You see a series of higher lows and higher highs. You see that move off of the October high. Let me just put that in some context. So we kind of blew out. We had a big, and now we're down 20% in a straight line into those lows in mid-November. We had a little bit of a bounce. Gold started rallying again. And now we see this kind of just falling apart from what is that, about 38 or so down to where we are at like 34. I just don't like it. I mean, I've never been a big gold guy. I've made the case again and again. If you want to buy gold, why don't you just buy nerd gold, which is the Bitcoin? You know what I mean? Like, so I get it. Gold acted very well. It's basically been up in line with the S&P 500 this year. I get the idea why you want to diversify and have a little gold. But when I think about gold, is it supposed to be a hedge against a weakening dollar? Well, we showed you the Dixie before. The dollar's doing anything but weakening, right? And so, to me, I think I think GLD looks heavy right here. I know that's gold. Those are gold futures here. So let's see if it retests that moving average there, and let's see how it trades right there. But let's go back to the Bitcoin for a second. So this is interesting to me for some of the same reasons that we just talked about with gold. So if the dollars can continue to go higher, well, then that would make sense that Bitcoin would go lower. If the two major use cases is for Bitcoin is one for dollar debasement, the other one is obviously an inflation hedge. So it's got that going for it. And then as a store of value, I mean, there's two competing things right there, right? Strong dollar, inflation hedge, store of value. And so to me, there's a lot of froth that's kind of been put into this thing over the last, that's an obvious thing. Okay. Folks are chasing it because of what they think is going to go on with some sort of regulation that better defines, how institutions or individuals might basically interact with Bitcoin. Obviously, blockchain technology is what it is. Things are being built on that. That has less to do with regulation, but more about the token here is the focus. So if we get into a situation where the government shuts down, let's say that's like goes on for a while and that there's a threat of that at the end of this week, well, what sort of regulation is going to happen really quickly in the new administration, right? And they're already threatening, House Speaker Johnson, who wants to kind of get this bill done. I mean, you can have total dysfunction as far as the Republicans in the House and the Senate. So I might be pushing out this hope for regulation or deregulation, and that I think should weigh on the Bitcoin a little bit, Amanda. Does that make sense to you?
Yeah. You want to hit XLV? Eric asks, is XLV bottoming?
Yeah, that's a good one. Okay, so we talked about XLV, I think, earlier in the week. I just want to go, Amanda, really quickly. Can you see the members of the XLV, what makes it up? Okay, let's pull that up for a second because I think that's important. All right, so Eli Lilly is the top holding.
Bear with me.
Yeah, we got it. United Health second, Johnson & Johnson. And, oftentimes, like, this is important to me to see what are the weightings of these names. Eli Lilly is 12%. United Health is about 9%. Johnson & Johnson's about 7%. AbbVie 6, Merck, 5. All right, so let's go look at Eli Lilly for a second. And we know why Eli Lilly had the year that it had. We know that Eli Lilly's come off those highs. We know there's news out about Eli Lilly right now in the active ingredient that goes into their weight loss and diabetes drugs. Let's go to 1 year for a second. So this thing was acting extremely well, as you can see, into July. You had that sell-off there. There was supply constraints. There was some competitive stuff, maybe some regulatory stuff. And it quickly went right back there, was unable to make a new high. And then you see that gap that was on earnings where the companies suggested, at least through their guidance, that the revenue growth that they had been seeing was going to moderate a little bit. So you see that it kept on going lower. It checked back to the 150-day, and now it failed. So there's a ruling out today that's saying that these drugs are no longer in shortages, and that is going to put some pressure on some of these other companies that were doing compounding. So that's not the drug straight from Eli Lilly or Novo Nordisk. It was a competitive thing. It was meant to be much cheaper, but it had to be given in a different way. It came in vials, and it came through a needle that you would administer yourself rather than a pen that was just, sent to you. You put it up against your skin, you press a button, bang. So when I look at Eli Lilly, I say to myself, this looks heavy. A lot of good news in the stock. Let's pull up NVO, which is the main competitor, Novo Nordisk. I make Wegovy and Ozempic, the two names that you probably hear the most. That's given back almost the entire move. I mean, Novo is unchanged on the year. I think it was up 30-some%. So again, I like Novo here. I like the fact that I think earnings estimates have come down. So maybe it's been de-risked a little bit. Let's see how it closes into the end of the year, because this was a very crowded trade with Lilly and Novo. All right, now let's go back to, before we go back to the XLV, pull up UNH for a second, Amanda, please.
Mm-hmm.
All right. We know what happened here. Okay. And this was kind of a pretty unique situation. It was a very sad situation, right? So the CEO of their healthcare or their insurance division was gunned down here in New York City. The stock is sold off about 20%, second largest component of the XLV. And, so that's been weighing on it. So you have to ask yourself first, has Lilly and UNH bottom, right? Before you can kind of make a decision, in my opinion, on the XLV, because you have basically, something like 22% are those two names. Now, UNH looks kind of interesting to me as far as like being overdone a little bit, and maybe from a valuation standpoint, it's a lot more palatable now. Lilly also looks a little interesting to me. I might go more towards Novo Nordisk, which is not in the XLV, just because, again, like I said before, I think earnings estimates might have come down enough. Maybe it's so much cheaper, and that one looks interesting. So now let's go back to the XLV for a second.
Matthew in the chat said Dan's on fire.
Well,
talking a lot today.
It's a lot. We have another podcast later with Peter Bookvar, Obliquely Advisors. Danny Moses is going to be on with me, and we are going to be dropping that for the On the Tape podcast tomorrow morning. I also have to go do Fast Money at 5:00, so hopefully I'll have a little bit of a voice. But I will tell you this, and I know, Amanda, you feel the same way. Fridays we rarely record podcasts, which is really nice because we get to catch up on a bunch of stuff that we don't get to during the week. Isn't that nice, Amanda? And you and I,
it is nice. Tired of hearing your voice after a couple of days.
By the way, people ask all the time about Market Matrix, and they'll be like, "Hey, why are you not reading that stuff?" And I was like, people are so sick of us by 4:00. You know what I mean? Like, why would they want to hear us do what our main man Brunson can do? All right, so looking at this. We're at new 52-week lows, all right? And we went from an all-time high. I think there was a hit max for a second here, and then we'll go back to a one-year sort of situation. Was that near 160 an all-time high? And I believe it was, if you just look at it. All right, so we've gone to, and I see a lot of charts like this, by the way. They've gone from all-time highs to 52-week lows, and not like a small amount. Amanda, just give us like what percentage that is, right? And so, if you say, all right, well, we made a brief new all-time high, and then we sold off, 5 or 6% or something like that. You know what I mean? Like, maybe that's
not 15%.
All right, so that's a pretty sizable. If you think about the S&P is sold off, 4% from its all-time highs, to have something like this, which is meant to be defensive, down 15%. So I look at this now. Let's look at like a 2-year chart for a second. And why are we
There
thinking
you go.
about the technicals here? Because, you think about this, like the fundamentals of the stocks in this group are so different, right? UNH is very different than Eli Lilly, which is very different than Johnson and Johnson. So, sometimes the technicals can be really helpful. Amanda, draw a horizontal line from all the way over in the left. You see that kind of consolidate? Nope, lower, all the way to the
Here.
left chart. Yeah.
Yep.
Yep. I mean,
I'll try to connect them.
right there. So look at that. I mean, like that's kind of an interesting spot. And so you could say to yourself, am I catching a falling knife? And you could be, because maybe that resistance that became support going back, 2 years, maybe it's just not that important from a technical perspective. But this is one we'll look at XLV, looking at a defined risk play. I mean, we looked at it yesterday, Amanda, I think, or on Tuesday. We're like, well, maybe we sell a put spread. What are we doing when we sell a put spread? You're selling a near to the money, sort of, or near where the stock is trading, or in this case, an ETF, and you buy a lower strike one in the same expiration. So what are you doing? If you are short a put spread, you're making a bullish play. If the stock is above the short strike that you're at, you make the premium that you were like taken from the short spread. If the stock is somewhere in between that spread, you can only lose up to a certain amount, right? The difference between the credit that you're taking and what would be the debit in that situation if you're buying it. And so to me, that's like a better way to play short premium, directional with defined risk. So we were thinking about something like that. Maybe we'll look at one next week a little bit. But again, might you start nibbling on this? Sure. If you think some of the major names have been de-risked a little bit, yes. All right, Diaz, what else we got?
You want to do one more?
Yeah, what time is it?
1:36. We can go as long as you want. Thoughts on BA and its bounce off recent lows. This one is from Steve. We have a call spread out in BA.
Yeah, we did a call calendar. And that was from what, December 10th? So let's go to a 1 year chart for a second here. So let's look and see where this was. All right, so December 10th, it had come back a little bit from 140 basically all the way to 160. Is that correct? In that area?
February 180 call calendar for 3:30 was at 165 when we put it on.
Yeah, so we were looking to kind of isolate this one area, 180 levels. So that was up about, let's call it 14% from those current levels. So what were we doing? We're selling a near dated call at that 180 strike, and we're buying a longer dated one. So really what we'd like to see now after we've had this bounce is kind of seeing a consolidation. I think we'll probably get that. We have a holiday shortened week next week. We have a holiday shortened week the week after that. So why are we trying to sell premium? We're trying to sell premium because when you have a period like this where you're going to see some vol come out because the less trading days, Christmas is a day and a half that's out in 1 week. New Year's is just one day in the middle of the week. Then you have the weekends. So this trade is kind of working in our favor right now. As far as Boeing, the stock, am I buying it here at 178? No, I'm not buying it. Right. You better really have the fundamentals down. You better have, conviction in the story. That's why I like doing a call calendar with that one. But again, I like the check back here. Let's see what sort of resistance it sees at 180, because I think that's kind of a technical level if you want to go back towards July and August, Diaz. What else? Let's take one more.
All right, so we've got Jay, our friend Jay, saying, does Dan see LAN at a potential reversal point?
All right, so this is one, and you guys know that I'm not going to bullshit here. Chemicals is probably one sector in the market that I absolutely know nothing about. Well, there's many sectors I know in the market, but this is probably on the top of the list. Okay, so let's start with that 1 year chart. And when I think about this company, okay, and I think about just the products that they make, and you think it's somewhat cyclical, and you think that if we have, an inflecting economy, a company like this should do pretty well. Here's a company that's growing earnings at maybe 9-10%. It trades about 27 times this year, 25 times next. Sales growth 1% this year, 5% next. This is a company that is, from a margin perspective, not bad, 48% or something like that. So let's look at the technicals. Maybe it's a cheap stock. Maybe you can come up, well, it's not a cheap stock, by the way, but maybe you're okay with the valuation relative to expected growth. And maybe this fits in some sort of narrative that you have about the economy, the global economy, that sort of thing. Great. I don't have that narrative. I'm looking at the chart right here, and I see a level. You know what I mean? I see this kind of 422 level. It's kind of where it bottomed out in May. It's kind of where it broke out back in February. I see what looks like to be, maybe a pretty big double top above that kind of 475 level. All right, now let's back this chart out, because there's lots of different ways to look at charts. Let's look at a 5-year. All right. So look at that uptrend that had been in place since the summer of 22. What's interesting to me also about this stock bottomed before the broad market bottomed. And that's always like a kind of interesting relative sort of thing to look at. You see that really nice uptrend that been in place for 2 years. And you see that 150-day moving average that acted as an uptrend also. Bounce it off, bounce off it, bounce off it. Well, what just happened here? Not only did we break the uptrend, we broke the 150. And again, does this thing have 400 written all over it? Fine. Yeah, maybe that's $22 away on a $422 stock. You may say, you know what? I really like this story. I like the potential cyclicality of whatever the hell. China's going to come back in line. I have no idea, right? Because I don't know the story. This is a bad chart. I mean, make no mistake about it. After such a nice move over 2 years, even think about that move earlier this year when it went up on a parabolic sort of manner. It checked back to that moving average and then kept on moving higher. You know what I mean? So look at how quickly it's come below that moving average. I think you probably see this thing trading near 400 on just pure technicals. And especially if I think about where I think the economy is going, I don't think the economy is falling off a cliff, but I think that higher rates, higher yields, and then higher for longer on the Fed funds rate, and then yields that are maybe on their way from 4.5% to 5%, and a dollar that's strengthening. I just don't see this as a great environment for the U.S. economy. I think if anything, GDP growth expected to be 2.8% next year is probably too high. So a stock like this is not particularly interesting to me, Amanda Diaz.
You want to talk Uber?
Yeah,
Cyril's asking, is Uber a buy the dip now? We talked about Uber yesterday on OK Computer with Dean Munster.
Yeah, we did.
So check that out on your favorite podcast for people. I have Uber, Jacob, if you want to pull me up.
There you are, Diaz. I love that. So this is one, and maybe, Amanda, you want to use your cursor for a second, and let's look at that all-time high that came in October. That October high was right around that Tesla robotaxi event. And, people were very unimpressed what they kind of put out there. So Uber, the idea of buying Uber after that wasn't going to be some massive, competition anytime soon for Uber and their fleet of drivers and the like here. So the machines weren't going to take over the humans just yet. And then you see that other gap, and that other gap had to do with an announcement by Waymo, as they are basically launching in new cities. They're not going to be partnered with Uber as they had been over the last 3 cities in LA, San Francisco, and Phoenix. So that was meant to be something that's disappointing. So you've seen the stock, a lot of competitive stuff like that. And now it's just kind of falling off a cliff. So I like Uber here. I think it's been de-risked. I don't think that any of that competition, whether it be from Waymo or Tesla robotaxi, is coming anytime soon. So I think to myself that if I can kind of separate the forest from the trees here and say, yes, I recognize the fact that there's going to be a lot of competition, but I'm going to take the over when Tesla's robotaxis are an event. You could say the market's a discounting mechanism and starting to think about that. Down 30% here, I think, is overdone. The one issue I have is there's 59 analysts who cover the stock, 53 of them rated to buy. So there's unusual enthusiasm from the Wall Street community. I don't mean from investors. They've been selling the thing hand over fist. Let's look at fiscal 2025, okay? We're about to go into that, our calendar year. It trades about 24.5 times, EPS. That's, growing 29%. 39% expected EPS growth in 2026. Trades 17.5 times that, all right? Let's look at sales. Sales are growing 16% next year, 15% the year after. If you think of this in a multiple of sales, we've given you so many examples over the last year where these high single digits, these mid-teens multiple of sales, this trades at 2.5 times sales, 2 times 26. It's turned into a really cheap stock. So if you don't think that robo-taxis are happening anytime soon, I think Uber is probably a pretty good do here. This is another one going into the new year. We're going to talk about bullish ways to play this. So that's the Uber. Diaz, I think I got to stop talking here. I loved it. It was fun. You were a great co-pilot here. Maybe we'll put in the chat, people. If you guys want to see more Amanda Diaz, we're going to have to bring her back by popular demand. In the meantime, you're just going to have to deal with her in the chat, regulating that stuff. But Amanda, this was
like
good.
The video. Leave a comment if you like it. Maybe we'll do more of it.
Yeah, so do this. If you're watching this now, you're either here live or you're watching it later. If you're not subscribed to our YouTube channel, go do that. I think we got over 95,000 or something like that, Amanda. It'd be great to get to 100,000. I don't know if that's going to happen this year. We only have a little time left, but go subscribe, leave a comment, rate it, review it, give it a thumbs up, because our YouTube channel has become a very important area of growth. New people are finding the podcast, so very good stuff. All right, man, it's Thursday. We're checking out on Market Call for the week. We have an On the Tape podcast that drops tomorrow. Danny Moses, Peter Bookvar, and myself. We're going to do all things Fed on that. We're going to look ahead into the end of the year and some things that we're thinking about into the new year. We have a couple mailbags coming out next week, or at least one. That'll be fun. Guy Adami is going to be back. So lots of stuff through the end of the year. AD, appreciate you being here. We appreciate all the viewers, all the listeners, our whole team for putting this thing together, making Amanda look like a superstar. So thanks so much. We'll be back on Monday with a Market Call.
See ya.